What if I told you that most UK investors don't lose money because the market crashes? They lose money because of simple mistakes they don't even realize they're making. In 2026, investing in the UK is more dangerous and more rewarding than ever before. Higher interest rates, smarter scams, AI trading hype, and new tax pressures mean one wrong move could cost you thousands of pounds. So in this video, I'm breaking down 5 mistakes UK investors must avoid in 2026, mistakes that destroy portfolios quietly. If you want to protect your money and grow it smartly, watch this till the end. Let's start with the most expensive mistake of all: ignoring taxes. In the UK, you don't just invest against the market, you invest against HMRC. Many investors focus only on returns and forget what they actually keep after tax. Here's where people go wrong. They invest outside of ISS when they still have unused allowance. They forget about capital gains tax and dividend tax, or they accidentally trigger tax bills by selling at the wrong time. In 2026, this mistake is even worse because tax allowances are tighter and HMRC scrutiny is higher. For example, if you make £10,000 of profit in a taxable account, you might lose a big chunk of it to capital gains tax. But that same £10,000 profit inside an ISA completely tax-free. Yet thousands of UK investors still don't use their full £20,000 ECA allowance every year. Smart investors don't chase returns. They protect returns. So, the fix is this. Before investing a single pound in 2026, maximize your stocks and shares ESA, understand the basics of CGT and dividend rules, and always think in terms of after-tax returns, not headline figures. Mistake number 2 is overtrading and chasing quick profits. This mistake is becoming more common every year, especially with TikTok, YouTube Shorts, and so-called finfluencers. Overtrading means buying and selling too often, jumping in and out of stocks, and reacting emotionally to every news headline. In 2026, markets move fast, but your money doesn't need to. Every single trade has fees, spreads, timing risk, and emotional mistakes attached to it. Most retail investors think they are being active, but in reality, they're just feeding brokers with fees. Studies consistently show that the more often people trade, the worse their long-term returns are. Professional investors win through patience, discipline, and time in the market, not by clicking buy and sell every week. The fix: create a long-term strategy. Invest monthly using pound cost averaging, and limit how often you check your portfolio. Just remember, boring investing often equals profitable investing. Next up, mistake number 3: falling for scams and too good to be true opportunities. This is one of the fastest growing dangers for UK investors in 2026. Scammers are no longer obvious. They now look professional. Common UK investment scams include fake crypto platforms, WhatsApp and Telegram investment groups, AI trading bots promising guaranteed returns, fake celebrity endorsements, and even clone websites of real UK firms. Here's the rule you must remember: there are no guaranteed high returns in investing. If someone promises low risk, high return, guaranteed monthly income, or a secret investment strategy, it's almost always a scam. In 2026, scammers are using AI-generated websites, fake FCA registration numbers, and professional-looking dashboards. Even experienced investors get fooled. The fix is simple but crucial. Only invest with FCA-regulated platforms, check firms on the FCA register, and never invest due to pressure or urgency. If it sounds too good to be true, it is. Your goal is to grow money slowly, not lose it fast. Mistake number 4 is having no clear plan or investing without a purpose. This mistake doesn't look dangerous on the surface, but it is. Many UK investors invest without answering one simple question: why am I investing? Without a clear goal, you panic during market drops, you sell at the wrong time, and you constantly switch strategies. Some people mix short-term money with long-term investments, retirement funds with trading money, or their emergency savings with stock market investments. That's how mistakes happen. In 2026, market volatility will continue. And without a plan, that volatility turns into fear. Smart investors separate their money into different pots: an emergency fund in cash, short-term goals in low-risk assets, and long-term wealth in stocks and funds. Each pound has a specific job. So, the fix is this: before you invest, define your goal. Is it for 5 years, 20 years? Then match your investments to that goal and accept that short-term ups and downs are part of long-term growth. A plan removes emotion, and emotion destroys returns. And finally, mistake number 5, trying to beat the market instead of building wealth. This is the ego mistake. Many investors truly believe, I can beat the market. But the truth is, most investors don't. Even professional fund managers struggle to beat the market consistently. In 2026, with AI trading, algorithmic funds, and intense global competition, beating the market is harder than ever. Yet, retail investors continue to pick random stocks, try to time the market, and follow hype cycles, only to end up underperforming simple index funds. Meanwhile, the smartest UK investors are quietly building wealth by investing in low-cost index funds, diversifying globally, and staying invested for decades. They don't aim to be clever. They aim to be consistent. So, the fix is to focus on your asset allocation, not on making predictions. Use diversified ETFs and index funds, and let the power of compounding do the heavy lifting for you. Wealth is built by time, not by talent. Let's be clear. In 2026, investing in the UK is not optional anymore. Inflation destroys cash, so doing nothing is also a risk. But avoiding these 5 mistakes can protect you from losing money unnecessarily. Paying avoidable taxes, falling for scams, making emotional decisions, and suffering long-term underperformance. Smart investors don't chase hype. They follow systems. If you found this video helpful, please like and subscribe for more smart UK investing content. And comment below, which mistake do you see most UK investors making today? Remember, choose smart, invest smart, and build wealth the right way. Thanks for watching.